Hello there, beautiful traders. Hello, everybody. Welcome back to my channel. Welcome back to yet another week, another episode on the weekly forex outlook. All right, so guys, in case you're wondering what this weekly forex outlook is, so this is actually a segment of my YouTube channel that I have dedicated to actually coming on here every week at the start of every week. That is on every Sunday to come and speak to you guys concerning the financial market, concerning the forex market, talking to you guys about the potential setups, the pairs I'm looking at, the pairs that you should be looking at, the events oncoming, and then risk on assets, risk off assets, trade results of our previous trade calls. All right, so I just come on here and then I let you guys know exactly what I'm looking at for the coming week, for the coming days, rather, for this week, which is on Monday all the way up until Friday. All right, so I come on here on Sundays and I tell you guys exactly what I am actually looking at. So once again, guys, if you're new to this channel, all right, if you're new, which I think you are, so I'm gonna give you 5 seconds, all right, because I want you guys to actually be a part of this community, a part of this Oren FS community, such that whenever I come on here and then I drop my videos, you be among the first few people to see, because I don't want you guys to miss out on trade opportunities. All right, I called a trade in my previous video, and then a lot of people did not actually get to it. So when I went to my Telegram community, they were like, "Oh, you called that?" I'm like, "Yeah, I did." So because you guys are not hitting the bell icon, whenever I drop a video, you guys don't get to see it on time. All right. So guys, once again, if you're new to my channel, I'm gonna give you 5 seconds to go ahead and hit that subscribe button and click the bell icon so that whenever I drop, okay, you'll be the first to see it. All right. So in 5, in 4, in 3, in 2, and 1. Then also, you guys know by now that I like to leave the best for the last. So I would advise you to watch this video right from the start all the way to the end. All right, watch it from the beginning to the end so you get to digest every single thing, you get to understand every single thing. And then if you have any questions or you have any suggestions or you like exactly what I'm doing, leave a comment in the comment section. I will find you and I'm going to reply to you. You know how? Because YouTube sends me an email once you comment. All right, so hit the subscribe button, hit the bell icon, leave a like, and then leave a comment. All right, so let's dive straight into my screen. Once again, guys, my name is Desmond Samuel and welcome back to my channel. All right, so now to kick things off here, the first pair I'll be looking at is oil. Okay, so I'll be looking at the oil, that is the US oil, real quick. So there's been a series of events happening in the world, in the Middle East. All right, so a lot of events have been unfolding lately, and then it has been taking a toll on the financial markets. As usual, you would actually expect that the markets react to these things because these are global events, all right, and the market is also a global stuff. So you would actually expect the market to react in some way. So now to kick things off here, we have U.S. oil. So I can remember being long U.S. oil. Actually, this should be here. Hold on, and this should be here. Okay. Yeah. So for me, I like to do something called a top-down analysis, where I go from the monthly time frame. All right. So it's not a strategy. Most of the people I have spoken to keep asking me, what is your strategy? It is not a strategy. It's just a different approach to technical analysis, where I go from the monthly time frame, then I go all the way down to the weekly, to the daily, to the 4 hour time frame. All right. So I work my way from the monthly. So I kind of have like a bird eye view. Okay, I have a better view of the entire thing. So, guys, sit back and then let us break this pair down. I'm going to be talking about, I think, 5 or 4 pairs. Let me just go over the ones I wrote down. So we have US oil, we have Euro USD, we have GBP USD, we have the dollar index, we have AUD USD, we have AUD CAD, and then we have NZD CHF. All right. So those are the pairs that I'll be looking at, and I'm breaking down each and every one of them in this video. So 1, 2, 3, 4, 5, 6, 7 pairs. All right, 7 pairs I'll be talking about, and then I'll be letting you guys in on the particular trade that I've been holding for a while now. Okay, so to kick things off here is US oil. So US oil, quick one. I can remember telling you guys that I was actually long US oil somewhere around here. Okay, and I was targeting $93 a barrel, which we have hit, and then we have decided to reverse all the way down. All right, so so I was long US oil. Let me just go down to my 4 hour time frame. Yeah, so I was long US oil at the 4 hour candle break and close of a level here. All right, so I was long. I think I had my entry at this level here, break and close. This is a CTL. So the CTL break and close. I was long this guy, and then I had my take profit at $93 a barrel, and we actually smashed that, and then we actually reversed back down. Okay, so now moving on. How do we actually make money off of US oil, which is exactly why we are here. All right, we are not here to discuss old trades. We are here to look at how we're gonna make money. So we have had this initial rally, okay, which let me just put it here. Yes, so this was the break and retest, and then the rally up, which I made money off of. So now we are having what seems to look like a bigger pullback. All right. So for me, personally, I have a very, very conservative approach to the market. All right. So I like to let the market do its thing. When let the market finish doing every single thing that it has to do, and then it now commit to a certain direction before I proceed. US oil is quite bullish. Okay. We've had series of higher highs and higher lows. So now this is like a break of structure here. This is a break of structure to the upside, and then this is currently a pullback. Now the problem with this pullback is that it's quite heavy. All right, it's quite heavy. So how do I mean quite heavy? You can see that whenever the market is approaching a key level or a level supply, be it supply or demand level, you can see that it kind of slows down a bit. But this guy didn't slow down at all. It just dropped. All right, so it's kind of heavy. And then similar thing happened on gold, which is, oh, actually I think I should talk about gold. I should talk about gold. So I'm just gonna make that 8 pairs. All right, so I'm talking about 8 pairs, and gold will be the last. So guys, you know we've had this initial rally, and then we're now having a pullback, and then this pullback is also looking like a lower high from this previous high, in the sense that if you bring your Fibonacci, you can see that this is from swing high to swing low. This is reversing at the zero point 0.5 Fibonacci region. All right, and then also if you look at it from the bullish perspective, you can see that this is a break and retest, which is also a Fibonacci level, and then this was also the second touch of a trend line. So you see these things are quite sketchy, yeah, and you want to go with the predominant trend, and the predominant trend on US oil is actually bullish as we speak. Okay, as we speak, US oil is actually bullish. So now let's look at things from a different standpoint, from a grand standpoint. All right, from a grand standpoint. So as you can see here, we have a break and retest on US oil. Okay, so what I would advise you do is, because one thing about me is I'm never ever in a rush to make money. I'm never ever in a rush to play straight. I'll wait for the market to do exactly all that it has to do, every single thing there is to do, and then I'll not come in. But if you look closely, I can notice a trend line coming all the way from this top here. Okay, so we have the first touch, we have the second touch, and this is being a third touch of the trend line, which was exactly why I put my take profit at this level, because I knew that something was going to happen. The market was going to react to that touch of the channel, and it has done that exactly. So now, this is putting us at a crossroad. All right. So what do we do? What do we actually do in so? Okay, so here is what I would do in a situation like this, all right, which is what I would advise you do is, now you must have your trading conditions. Actually, you must already have trading conditions in place before you even starting to analyze the pair. But with this, you must be extra careful. You must be extra strict, okay, because now this could go both ways. This could rally all the way to the upside, and then this could rally all the way to the downside. All right. So this was the smaller pullbacks I kept talking about. Then this was the bigger pullback. Then this could also be a break and retest. So you see two things happening at the same time. So what do? You wait it out. All right. You wait it out, because now you don't really know exactly in what direction that oil wants to go. Does it want to go up? Does it want to come down? What exactly are you doing? And then we have like a minor level somewhere around here. Okay, we have a minor level somewhere around here. So you see, so the bigger trend is bullish. Okay, the bigger trend is bullish, and then also the bigger trend, the medium term trend is actually also bullish. However, we are having some sort of pullback here, and then we had the first touch of the trend line, second touch of the trend line, and we might come in for a third touch here, and then before we now come and put in, a reversal pattern here before we rally all the way to the upside. So these are the things I am actually looking out for on US oil. But for this week, for this coming week, I am actually very bearish on US oil because I would like to see US oil come in for a third touch here, and then we now collapse to the downside, because this is a high, this is a low, lower high, lower low, lower high, somewhere around here. Then we should collapse and to the downside. All right. So that is exactly what I am looking at. So my my um my profit target for US oil this week would be, if you're buying from this zone anyway, if you're buying from this zone, which I don't really advise you buy pullbacks or you trade pullbacks. I would rather wait for the market to pull back and then now hop on to trade itself. However, if you're the type that likes to trade pullbacks, that's fine. My target for oil this week is $82 a barrel, and then once we get here, we can now watch for candlestick reaction. Let's see how the market reacts. Do we actually break out of here? We actually break out of here, retest and rally, or do we actually, rally into this trend line, then give us a third touch and then drop? So we will actually get to find out this week. All right. So don't forget that this week is also CPI. We have CPI news coming on this week. So you want to be extra careful and then watch out for all these, highly volatile pairs. Okay, so now that is about US oil. For me personally, I am actually very, very, very conservatively bullish on US oil. However, everything boils down to this particular point here. If and only if we do not get a break above here, I'll be looking to sell this guy back to the downside. So I'll be watching closely for candlestick reaction. So this is exactly where candlestick formation comes in, and then it lets you in on what the market is actually about to do. When you're confused about the trends, when you're confused about chart patterns, you watch out for candlestick reactions. So I'll be looking to see maybe a doji candle or maybe a pin bar, a bearish pin bar signifying bearish pressure. Then I'll not come in and then sell this guy. All right. So that about US oil. I'm actually looking out for a selling opportunity this week. Buying this pair is not even an option for me right now until I see that we have significantly cleared this level and also this level. All right. I don't want to buy into this trend line, guys. I want us to come and clear this level. So for me, I am actually bearish as currently, and then once we are able to come up here and then clear out this minor resistance bar here, then we can now look at US oil running all the way to $100 a barrel and beyond. All right, so that is about US oil. So moving on, the next pair on our list should be Euro USD. All right. So let me just bring out Euro USD real quick for you guys. So for the Euro, this is exactly what's happening on the euro, and I've been seeing a lot of people get confused about the euro. They don't actually know what's happening. Right? They don't know what to do. Are they buying or are they selling? Now, one thing you need to realize is that before the market, trends, it gives you some bit of consolidation, and then before the market, sorry, and then also before the market, reverses, it likes to give you a clue. All right, so that is exactly what the market is doing here. The market has been trending for a while, and then the market only trends for 40% of the time. So it's not even every time that the market trends. So if you see the market trending, just best believe that somewhere along the line that a pullback and a range is definitely going to happen. So for Euro USD, this is exactly what's happening here. We've had this double top here, then we had the collapse for 2 years, 2021, 2022, and then we had this pullback on the year 2023, which is this year, and then now we are actually starting to pull what seems to look like a double top. However, we are having this pullback to the neckline here. So for me personally, this is looking like a double top on the monthly time frame. But once you move to the weekly time frame, you see something that looks a bit like a wedge. Okay, that looks like a wedge, and then looks like a head and shoulders pattern. All right, so we are seeing multiple chart patterns here signifying bearish trend, actually signifying the end of the pullback. So we had the wedge pattern here, which we actually broke out of. All right, after this fake out here, we broke out of this range pattern, and then we have been collapsing to the downside. So the market is currently pulling back, all right, into a Fibonacci level, because I'm going to show you guys that Fibonacci level, very, very soon. Then also, this is also looking like also looking like a head, a shoulder, and a shoulder pattern formation happening right here. So I do have some concerns on Euro USD primary one being this level here. All right, so this was the previous supply level here, then this was the previous demand level. And then the market just pinned right into that level and then printed a bearish weekly candle. However, the previous candle that preceded this candle is still very, very bullish, and it was a very bullish engulfing candle that engulfed one, two, three. In fact, engulfed 6 weeks. That's a month and 2 weeks of trading action. All right, so this itself is not enough to signify a change in direction. I actually think that this market is going to pull it deeper into this level here to come and give us a Fibonacci continuation at this point right here, which is the 1.90, the 1.09000. All right, so for me, I won't get carried away by this. I see this as a trap. Okay, I will not get carried away because I'm actually very, very still bearish on the dollar index. And you guys know that the dollar index and the Euro USD are inversely correlated, rather inversely correlated. So if the market is still if the XY is still if I'm still bearish on the XY, then I have absolutely no reason being bearish on Euro USD at the same time. All right, so for me personally, I'll be watching this level closely, but this looks like a fake move anyway to trap sellers, to trap early sellers. I feel like the market is still going to pull into this level and then collapse significantly. All right, so because this was the previous shoulder, that was the left shoulder. All right, and same thing happened. The market got to this point. He acted as if he had respected that, and then he came and blew through it entirely. All right, so exactly something like that might just happen. All right, so we could have this trap here to trap the sellers, early sellers, and they will now blow up and then retest to give us a ratio that they will drop all the way down to the downside. All right, so how do you make money off of this? Now let me scroll down to the lower time frame. So as you can see here, we've had a move like this. All right, so what is actually playing out here is a Fibonacci level of this guy on the daily time frame. However, for me personally, I rather go with the predominant trend, with the dominant trend, which is on the higher time frame, which is on the weekly. All right, because sometimes you see these daily trends, they don't really last that long, and then next thing you get stopped out if you take a trade. So for me personally, I like to wait and see what the market has to show me. So I don't have anything in particular for this week on Euro USD. Nothing looking interesting here until I see maybe we break below this key level here, or we break above here. If we indeed break above here, I'll be looking for opportunities to the upside for quick scalp trade. And then if we do break below here, then we are in for a significant bearish drop on the euro. So we have 130 pips to the upside, and then we do have quite a lot of pips once we break this key level of the way here. So that is that about the Euro USD. So once again, guys, from the top all the way down to the bottom here, you can see that this is the only pullback that makes sense, is the one that ends up at the 1.09000. So you need to learn how to count your waves, and you need to learn how to know when the market is about to reverse and how significant should the reversal be. Depending on how big the trend has been, because for every trend there is a resulting pullback. So if you're saying that this is going to be the pullback, this pullback is not enough, is not enough to cater for what has happened from here to here. All right, we've had 831 pips drop from here to here. So this little pullback is not enough. The market has to reverse up to half at least up to 50% of the entire impulsive move. And then this was an impulsive move, like it or not, this was an impulsive move on the daily time frame. So we need to actually see a pullback to the 50% point of that entire impulsive move. And if you pull your fib tool, you can see that the 50% lies right at the 0.5, which is around the 1.09000 region. So for me, I'm not getting carried away by this actual pullback. I am actually expecting the euro dollar to come into this level, which is 1.0999, before I now take my trade. All right, so that is all about the euro dollar. Trade safe and know exactly what you're doing with the market. So our next pair on the list, actually hold on, let me just confirm from my journal. So I've spoken about US, or I've spoken about euro dollar. So the next thing is GBP USD. So GBP USD and euro USD are quite similar. All right, they are positively correlated pairs. All right, so is something similar on the GBPUSD. GBPUSD actually has a better picture. If you look at it from a grand standpoint, you can literally see what I am talking about. All right, you can see this drop, this whole drop. By the way, if you want to know how I plot my key levels, once again, come. The link to my Telegram community is in the description. Click there and then come and see like-minded traders do these things on a daily basis. I call out trades there on a weekly basis. All right, so you can see this whole drop here. This was a 2021-2022 bearish drop on the pound sterling versus the dollar, and then you can see that after that impulsive move here, we had a pullback up onto the 50% of the entire move. So the market came right into this key level and then reversed up onto 50% of the entire move, which is the reason as to why I am patiently waiting and sitting on my hands when it comes to Euro USD, because I feel like the pullback that we've seen is not enough to cater for the drop that we've had. Okay, we need to see a deeper pullback for that pair, because the trend is not looking very healthy. You need to know the difference between an unhealthy trend and then a healthy trend. So for as for the case of Euro USD on the daily time frame, the pullback I'm seeing is not healthy. So it's quite risky to put your money in there. So moving on to the pound sterling, you can see when we collapsed here 2021, 2022, we pulled back more than half of the move. Okay, more than half of the move, and then we're now looking to change a trend all the way back to the downside. So as you can see here, we've had a head pattern form on the pound sterling, and then we had a shoulder pattern, left shoulder form on the pound sterling. So we need to see a right shoulder form right here. So and then this right shoulder falls in at the same point as a Fibonacci 0.5 region, which is the 1.26000. So for me, I am actually bullish on the pound sterling and the Euro USD medium term. All right, short term I'm bullish, because why? I see a chart pattern formation right here, and the market has to go and complete that chart pattern before I now bring my money and put in the pound sterling. Otherwise, I will not be doing anything on this pair until I see a clear and significant break below this key level here. Then a pullback, then I know that we are in for a long drop on the pound sterling. So even if you come on the daily time frame, you can see that from the weekly, we have a head and shoulders pattern form. On the daily, we also have a head and shoulders pattern form. All right. So on the daily time frame, we had this head, shoulder, we've broken down without even testing the neckline. And you guys know that whenever the head and shoulders pattern form or the inverse head and shoulders pattern form, we must always come and retest the neckline. So you see, we have tons of confluences, pointing to the upside that this pair is actually in for a deeper pullback. So we need to see a deeper pullback on this pound sterling before we now see a significant drop all the way to the downside. So for me, my target for the pound sterling going into this week would be 1.26000. Why? Because if you look left, that was exactly where the market had issues breaking below and above. So this is an intermediary level, because it has served as a resistance and then also served as a support, or rather served as a supply and then also served as a demand level. So that those are what we refer to as intermediary levels, when one level has served as support and then also served as resistance. So for me, this is what I am patiently waiting for on the pound sterling. I need to see a pullback. All right, I need to see a pullback that will compensate for all of this drop we've had here. Listen, guys, we dropped since July. All right, July, August, September, October, November, 4 months. All right, so we have dropped all the way from there all the way down here for 1,000 pips. So we need to pull back, all right, into this whole level here to at least pull back to at least 500 pips. At least 500 pips, right? So we need to pull back, and then we now continue from here. So the market will decide if it wants to break above here, or if it wants to continue to the downside. But for now, I have nothing on the pound sterling. It is looking quite tricky. Actually, it's looking like it's about to trap a lot of sellers. So I'm not really going to be overly interested in the pound sterling, because it is not giving me a clear direction. The market has to give me a clear direction before I come on here to place my trades. All right, so I still see this level as a juicy liquidity level that has to be taken up by the pound sterling before we now collapse all the way back to the downside. And that's that about the pounds. You can see that we are still marrying this level. It is just marrying this demand level here, and then we've reacted once, and then it might likely come back into this level to play around and then before we now rally all the way to the upside. But for me, my target for the pound sterling is 1.22600, and then if we get there, and then, or rather when we get there and then the market chooses to break above okay, we would trade accordingly. If it chooses to drop back below, we will also trade accordingly. But for now, I am sitting on my hands because trading as traders, we are reactive, we are not predictive. All right, so that's all about the pound sterling. So I'll be moving on to the dollar index to show you exactly why I am actually bullish on the pound sterling and then the euro dollar moving into this week. So right here now we have the dollar index. So the dollar index is like a pair that represents a basket of currencies or a basket of forex currencies against the dollar. All right. So every other pair against dollar is the dollar index. So you can see that we've had. So this was if you flip your Euro USD chart upside down, if you flip it inverse, you see that this was also the exact same chart pattern we had before the fall. All right, so this is inversely correlated to the euro and pound sterling. So now we've had a range here. All right, and then we have blown out of this range, and then we are currently pulling back. However, the pullback is not complete yet. Okay, it is not complete yet. So whenever you have an impulsive move. Like I said, the market must reverse to at least 50% of that move and then before it continues in the direction. So on the weekly time frame, you can see this bearish engulfing candle that engulfed 1, 2, 3, all right, 4, 5, 6, trading weeks. All right, so that's a month and two extra weeks. So now typically once the market gives you this kind of move or once you see this kind of candle, a candlestick, the next candlestick that pops up, the bullish one must actually come. So even if it is a bullish candle that looks that is an engulfing candle, okay, that is this the market must always reverse to at least 50% of the entire length of that candle. So be it bearish, be it bullish, the market must always do the exact opposite, at least 50% of that move before continuing to the downside. All right. So this gives it a healthy trend. So now this gives it a healthy trend. So as you can see here now, we've had this drop here on the DXY and then we're currently pulling back. But for me personally, this is a lot clearer on the daily time frame. All right. So this was the series of lower lows and lower highs we kept on getting, and then on the daily time frame we had what looked like a double top. So this is first top drop, second top drop. So we broke this neckline. So we're currently coming back to retest the dollar index right here, as you can see. So once the market comes and pinch into this into this M pattern formation or a double top, as most people would refer to it, we should actually see a drop on the dollar index to the region of 104.600. All right. Now, reason being, we've had once again we broke out of here, then we came and gave a minor pullback, and then we are not coming for a bigger pullback. Something I have explained thousands of times on my previous videos is that once the market breaks out, it gives you the first pullback, which is not quite significant. Then it comes subsequently it comes back for a bigger retracement. All right. So for me, I'm personally bearish on the dollar index going into this week, November. All right. So I'm actually very, very bearish on the dollar index. So we are actually running into the neckline of a double top on the daily time frame. And once this is completed, we should see the dollar index collapse all the way to 104.400, which would in turn send the majors, the XXS USD pairs all the way to the upside, since they are inversely correlated to the XY, which is exactly why I am actually waiting for Euro USD, GBP USD to pull back to that minor level and then complete a chart pattern that they are trying to form, and then we now go in from there. All right. So for me, my target for the XY this week is 104.600, 104.600, 104.400 region. All right. So the market has to pull back to this level, marry this level before we now rally all the way to the upside, or we break below, whichever thing that the market chooses to do. I am actually ready, because once again we are reactive, we are not predictive. So we are actually waiting for the market to finish whatever business it has to do here. Then we now collapse all the way to 104.400, and that is that about the dollar index. All right. So the next pair on our list is AUD USD. All right. So for AUD USD, um, I explained something on in my Telegram community one time. So I was saying that what's on this NZD USD. Speaking about AED USD, AED USD. Where are you? Where are you? Where are you? I think I put that pair. It was annoying, man. So I dropped it all the way to the bottom. I put AED USD all the way to the bottom, guys. I was pissed off. So look, look at this whole nasty move, guy. Like, bro, I was in this trade. It just kept on ranging. I got pissed off. And I'm like, fuck it, bro. So as you can see right here, we have had a range, and then we've broken out of the range, and then we, first of all, this whole move is very bearish. It is very bearish. We've been falling for quite a long time. The overall flow of the river is very bearish, as you can see right here. However, on the weekly time frame, this pullback is too linear. It's too linear, guys. It's way too linear, all right? And if you plot your fib levels, you can see that we still have some upside to cover on the Aussie dollar. So I'm actually expecting a pullback. Let me just go dive straight to the point. I don't want to waste your time, guys. So we've had a breakout and a minor pullback on the Aussie dollar right about here. This was the base of this whole range, and now we should actually pull back. Price action, the principle of price action states that after a trend, there's always a pullback. All right, so the market only trades for 40% of the time. So we need to see a pullback to this key level right here. Okay, we need a deeper pullback. So AUD USD has to do a lot more than this, than what it has just done. All right, we need to see a pullback. All right, so that is exactly what I'm waiting for. So guys, that is exactly what I'm waiting for. So my target for AUD/USD is 0.65826 for this week. Okay, I will not be falling for this trap here. Otherwise, if that doesn't happen and then we see a break below this whole base here, then I'll be looking to short the Aussie dollar all the way to 0.6 000. All right, so that's my prime target for Aussie dollar long term is 0.6000. However, if you not break this key level here, we should pull back to this whole level, which is 0.65826. So that's that about the Aussie dollar, guys. So the next pair on our list will be AUD/CAD. All right, so AUD/CAD. Um, so I spotted something really nice on AUD/CAD one time. This is it. I saw something really nice, guys. So I was actually bearish on this guy for a very long time until I saw that we broke out of this particular range here, and they were not pointing to the upside. So, guys, quick one. So this is what is happening on AUD/CAD. For AUD/CAD, we've been falling for a while since February this year. We're dropping on, we hit this key demand level which the market has respected in the past year. If you look left, that's respected in the past, and then this is where we are. So for me, I am actually quite bullish right now as we speak on the on the Aussie card. All right. So for me, Aussie card we've broken out here and they're currently pulling back. So for me, this is also a fib level play, right? Sorry, it's my recent. This is my recent low. So this is also a fib level play. So we had a breakout and then we have a retest happening right now. So how do we take opportunity or advantage of this opportunity? So now we've had this pullback here. So for me, I'll be waiting for my entry criteria which will be the 4-hour candle break and close. All right. So once I see a 4-hour candle break and close on this Aussie card, I will be long, and then my first level target for the Aussie card will be 0.89095. So once we clear that level, I'll be looking to ride Aussie card all the way up to 0.9200 if the market wants to give us some more pips. So that's that about the Aussie card. So you can scale down to your 1 hour time frame, 15 minutes time frame, and take your entries. All right. So that's about AUD/CAD. So guys, the next pair on my list is NZD/CHF. So I've been actually very bearish on NZD/CHF for quite some time, and then this was the level that I was actually asking you guys to watch out for this whole supply level, and the market came in there and then it did its thing, and then faked out a little of buyers and then came all the way back down. So currently I am short NZD/CHF. But going into this week, I'm actually very conservative. I'm actually quite careful because I don't want to, expose myself. Because bro, we have CPI around the corner, so I don't want to overly expose myself. So this particular trade here, once I see a few more pips, I'm going to lock it in. Okay. But currently I'm actually very bearish on NZD/CHF. I sent the trade call to my Telegram community. So if once again, if you're not part of my community, you can check the link in the description. You see the link that brings you directly to my Telegram community where you see me there, analyze this pairs live, and then give out trade calls every single time. So this is the pair that I'm actually still very bearish on. So we had this impulsive move here and a pullback here. So this was an impulsive move coming for a pullback, and then pullback landed right into the Fibonacci level. So I am actually still bearish on NZD CHF moving into this week. So my next level target for NZD CHF is 0.52327, and then my overall level target is 0.51867. All right, so that's that about NZD CHF. And the last but not the least, the last pair on my list will be gold. So the last pair on our list today is gold. Guys, I can remember talking about gold in my previous, analysis, saying that I am actually waiting for a pullback on gold, because I actually expect the pair to actually move, to actually pull back, because we had this, impulsive move, and then we didn't even have any form of correction whatsoever, and then the market did just that. I told you guys to chill. I told you guys in my Telegram community to hold on, that we should actually see a pullback on gold before we now decide what next we want to do with this precious pair, and then the market has done just that. First of all, we dropped. It's my target here, and then we now reverse to the upside. And then we're now currently testing a demand level. I'm currently testing a demand level. So for me, I'm watching gold carefully. Okay, I'm watching this guy carefully, especially as we have CPI around the corner. I am not even in the mood to rush anything. Okay, I'm not rushing any trades. I'm just sitting on my hands. I'm waiting patiently. So I'm gonna see if we indeed reject off of this level, which, as you can see here, we have given a double top. So I actually expect the market to pull back into this level. All right, so to the neckline. Then once you get back into the neckline, we should now collapse to the downside. But for me personally, my prime target for gold is 067.511 long term, because that was the previous, supply level before this market rallied all the way, before this market, flushed all the way to the downside. So now we are actually retesting a demand level, a level that has served as supply, and then also demand, which is also what we refer to as intermediary level. So for me personally, how would I take advantage of this particular scenario here? So you guys, once again, 4 hour candle break and close. All right, 4 hour candle break and close. I need to see 4 hour candle break and close here. Then I now buy this guy. My first level target for gold would be this neckline here, which is 1977.149, and then overall, if we did reach that neckline, we come here, and then we rally into $2,000 per ounce. All right, so because it is a rounded figure, and the institutions, the big firms, the trading banks, they don't play around with, psychology levels or rounded figures. So you need to also watch out for these levels as well. Okay, so that is that about gold. And then if that doesn't happen, guys, if that doesn't happen, then we see a breakdown on gold. Then we should see a retest of this level, and then a collapse all the way back down to 1801.466. All right, so that is that about gold. Thank you so much. And if you watch to the end, leave a comment. Tell me what you think. Tell me what other pair that you would like me to talk about, and then tell me if you're actually struggling. If there's something you're struggling with, all right, if there is something you're actually struggling with when it comes to this financial market, let me know, so I know exactly how to tailor my videos to suit your needs. All right, so thank you so much, guys. Once again, my name is Desmond, and leave a like, leave a comment, and do not forget to subscribe and hit the bell icon, so that next week when I come on here, when I drop another banger like this, you'll also be among the first few to see it and then act quickly. All right, thank you so much, guys. That's my time. My name is Desmond.